Okay, start recording. Shri Gurubhyo Namaha. Om Shri Ganeshaya Namaha. Good evening, friends. I am your being Venkataraman, the inventor of Inflate Pro, Inflation Protected Return on Investment. Today we are continuing our series on retirement planning series to find out is one have the higher priority than retirement plan. I take 3-4 cases. Let me explain you about this. I am at present living on rented house, taking the lease agreement for 3 years with a clause of increment of 500 rupees every year on the rental value. My 2 BHK flat, it's a flat. It is on the outskirts of Pune. By last year, the owner was ready to sell for 42 lakhs then and agreed to me at 13,000 rupees per month last year. As per the increment clause, I am paying 13,500 rupees this year. However, for my calculation purpose, I have considered 5% simple interest increase. Also, the cost of the flat also increases year over year. Example, the same flat he is willing now to sell at 44 lakhs. Taking a little long term of 10 years, we can see the calculations in my web page that what is the return on the investment. The return calculated is 7.76. Anyhow, we will see the calculations. Let us go to the website, my website vnvenkat.com, and look on the home page, look for reverse SWP, Infla FD and others. Because we do not know the interest, we have to calculate the interest or IRR. I am calling this program as the reverse SWP program. Okay. Click on it. Now there is a input menu is there, and here at the bottom of it there is a real estate question mark, real estate commercial question mark. You click this real estate question mark, you get my present one for 42 lakhs. The beginning interest rate is for 13,000 rupees. That is interest rate or value. Value is 13,000 rupees, 5%, etc. Filled up, and I got the internal percentage interest percentage calculated. That is IRR is 7.76%. The table is here, starting with 13,000 rupees, 13,000, so on. Is increasing on simple interest, simple rate of interest. It is increasing by 650 rupees uniformly, and at the end of it is the cost of the cost of value will increase at the end of 10 years, and I have considered this as 150%. That is, from 42 lakhs it will increase to 63 lakhs. We can go back to our presentation chart. The return of IRR in this case worked out to be 7.76%. The screen sheet of relevant portion of the table is shown below. The same portion which I have given it in, I have shown it in the presentation itself. A screenshot is the input given, and we calculated interest of 7.76%, and the return value is every year rental value is also shown here, and of course rental value is also shown here. Of course, in the original, in the calculation we have got audit table also is running on, but anyhow the screenshot of this portion was given in the presentation form. Now let us see. Let us take the case 2. Let us take the case of commercial place in my same locality of about 200 square feet. The square feet is less, but almost cost is same. Outright cost is 42 lakhs and rental value is 13,000 rupees. The lease would be for 20 years and increment value will be 0. Increment and rent value will be 0 for commercial people. And the maintenance cost would be borne by the tenant during this period. The cost of premises is likely to increase 4 times or 400% of the current cost in 20 years. Of course, there is some advance amount interest free, but not taken into account in my web calculation. We can see the calculation in my web page. What is the return on this investment? The IRR in this case worked out to 9.06%. Of course, screenshot is shown here at the bottom, and the relevant portion of the screenshot is shown here. Anyway, we can see the working of this number in my calculation. Say here, there is a real estate commercial. This will change this data, and accordingly we will go here. This 13,000 is the rental value, and inflation is 0%. That is, for the 20 years long period, the tenant will be paying only same 13,000 rupees, but the cost of the tenant will bear the maintenance cost and etc. At the end of 20 years, it is the value raises to 4 times, that is from 42 to 1.68 crore. Okay. Now, the internal rate of percentage, internal rate of return has been calculated as 9.06%. This portion is shown in the input menu here, but anyhow, this portion of the table is shown in the screenshot. It has got RD table also. Anyhow, we will restrict to this page itself is sufficient. We will go back to our presentation again. See, this table is shown here. Now, let us take case 3. Let us take real story of relative on Mr. S. He got a plot allotted by a city development authority in the outskirts of a city, constructed a house with total investment of around 8 lakh rupees. Soon after, he got transferred and got office quarters wherever he went. He gave his house to a relative at rent free. For of course, the relative paid a lump sum of X to Mr. S when he sold the house, and the sum of Y for a sum of Y for after 25 years. The sum X plus Y worked out to be 10 times his investment. We can see the calculation in my web page on this return of the investment. See, and internal rate of return worked out to be 9.25%. Let us try to work out this figure. That is 8 lakh is the investment figure, and rent he got is 0, and after 25 years got a return of 10 times, that is 1000%. A simple interest component does not matter just because it is 0%. Okay, now here for this input, internal rate of return worked out to be 9.25%. In this 10 times the investment, both rental value and lump sum towards the rental value as well as the sale of the house included. This also shown in the presentation chart. So, screenshot of this shown below, 9.25%. The screenshot is shown here. Now, let us take another case, case 4. Let us take imaginary case of investing in a residential flat in the heart of a city, say Pune. Let the present cost be 1 crore rupees. Let the rental value of the premises be 35,000 per month with annual increase of 5%, simple increase. Let the future value of the automatic based on the above inflation figure of 5%. Let the term be 10 years. The return IRR calculated to be 8.24%. The screenshot is shown in the subsequent page. Let us go to the page itself and see for ourselves the calculations. Say let us take investment to be 1 crore, and we can see here investment to be 1 crore at the rental value is 35,000 rupees per month, inflation is 5%, simple increase, charged years 10 years, and the maturity figure worked out to be 1.5 times, the 1.5 crore, 150% or 1.5 times. In this case, the internal rate of return has worked out to be 8.24%. Here also the auditables are there, which shows the interest at this calculated figure 8.23242024%, and payment we know, and accordingly closing balance worked out, and so on and so forth. Our interest is only about this interest calculation. It is 8.24% in the 8.24% for 10 years period. Okay, let us continue. See, the screenshot is split into 2 pages. One page is here, next page is here, and so on. Let us take. Now, inference. Real estate investments can generate a reasonable returns better than fixed deposit, but not up to our desired 11% as in mutual fund. Home loan interest rates are also lower than these returns and is worthwhile. But when it comes to priority, it takes lower seat than recurrent plan of achieving 11% minimum. With my software and reverse infra FD and others, in my home page bvenkat.com, one can check for their own input data, no login required, page is open to public. My videos are based on sample data of person of both husband and wife earning about rupees 60,000 per month. Those who are better off can include home loan etc. as priority next to retirement plan only. With this, let me conclude this session. Bye for now. B.N. Venkataraman. Thank you. Thanks for watching. Let me close it.